Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for March 23rd, 2016. I'm Frank Ochoa, and here's a look at the daily time frame for the ES. Right now, we see a very, very narrow multi-day range that's coming into the market here over the last few days. We obviously have two more full trading days here in the U.S., and then Friday is a market holiday in the U.S. So obviously, we could see further sideways trading behavior until next week's trading. Obviously, we've been in an uptrending market, so any pullback is still a buying opportunity for completion of the move into 2061 and perhaps as high as 2077s. That would complete the round trip move that we talked about before, where price sold off up here, sold off to these lows, failed to see a new low below that low, and then snapped back all the way toward the origination point of the rally. That would put us right back into a 100% move. So overall, this could be very significant, reaching this upper portion of the range. However, what we've seen here recently is how prices have failed to really see acceptance above 2061, 2070, and so reaching this zone again could lead to another sluggish move that leads to another rotation lower. So this is kind of looking out longer term. However, short term, the expectation is for continued near-term strength toward that 2061. Failure to hold above 2028s, 2025s, that could lead to a rotation into the 2000 level. Pullbacks to that level should still be defended for another round of strength. So overall, continued strength should be seen until proven otherwise. Now, if we look at the ES and the intraday time frame, obviously we have a very clear key level here. 20.44.5, that's the important level on top. That's the top of the key range that goes from 31.25 up to 44.5, midpoint at 37.75. You can see here that this is the top of the range, price attempting to see acceptance above it, pushed through the range, held briefly, and then sold off again. And then this morning already, a little bit of weakness coming in. So 2044s are very, very important. If price can hold above 2044, you could see a push through 2047 that leads to a continuation into the 100% expansion target at 2057s. Until that occurs, though, we could see further trading range action back and forth within this range. As a matter of fact, any failure to get above 2044 half opens up a potential for rotation back toward the bottom of value and the bottom of the key range at 2031s. So right now, watching 2044s, if there's a failure to see acceptance above that zone, we could see a move right back toward recent support. Here's a look at the daily time frame of crude oil right here. Obviously very similar to what we've seen in the ES. In this contract, basically price saw a rotation off the lower end of the range here. That implied a move back across the range into our upside targets. First the midpoint, then the top. We reached the top here. Composite VPOC has shifted up from 34.25 up to 40.08, then again up to 41.28 where we currently are. That's a shift down from overnight trading. But overall, after the recent rally, you've seen VPOC shift up a couple of times. Volume, point of control is right here. That's the area that bulls need to continue to defend. And right now, we're just below that area. If there's a failure to see acceptance above 41.28s, that could open up a quick retest back at recent support at 37.65, followed by a likely rotation back toward previous value at 34.25. So this level is very, very important. Additionally, 42.50 has been a significant rejection zone so far. We talked about that level pre-market a few sessions ago. Basically, you have the 42.50 level right here. That's the bottom of the impulse move for that period of time. Basically, coming into that area right here from below, that was defended, and that's where you saw the pullback. So this is a big time level on top. You can see the ledge here. Any failure to get above that zone auctions price back downward. And again, if price can get above that zone, there is clear air back toward the center of that range at 49.13, which would be that HVN above. So there's a couple of HVNs above to play toward, 45.65, 49.13. Those could easily be reached. But first, that 42.50 is very important. And we could see a further rotation back off that level for price to kind of get gassed up and then attempt another squeeze. So there's a couple of scenarios that could play out. Until then, we're likely going to see further development between 40 and 42.50. Looking at the intraday time frame, you can see how price has been coiling up here. Obviously, a key range from 41.79 to 40.41. We talked about 41.79, 41.80 in general being a key zone where bears are absorbing all rotations into that area. And that absorption usually leads to a push downward. So after we saw the big push into 42.50, price dropped, came back, and then 41.80 has become the area where bears have defended time and time again. So look for bears to continue to defend 41.80s for a shot at seeing a push downward, perhaps through 40.08 and into the next support zone below. And right now, that next support zone could be as low as the 37.70s. But if you're going to see expansion from this range, the major target to play to would be 39.03. All right, let's take a look at gold real quickly here. Gold, we talked about how price was seeing rejections at highs. We couldn't see any movement above 1272s. When we saw this rotation here, price come into it, I mentioned failure to get above 1272 opens up a return to 1233 to 1227, and we've hit that zone this morning. So we've seen a steady continuation. Even yesterday morning when we came into this area, I said that push higher could be a lower high that leads us into that zone. So you can see we've had these levels pretty much marked nicely, and now we're back into that zone. I would think bulls want to defend between 1226 and 1227 for another rotation back to 1263.90. Failure to hold 1226 opens up a continuation against the range into 1191.50 to 1196.50. Looking at the NQ now, the NQ has been very bullish, trending nicely higher this entire time. One thing that's been impressive here is that we haven't seen much pullbacks at all. I mean, it's been a steady continuation higher. For the most part, higher highs, higher lows day over day. We did have kind of a quiet pullback here. ECB day sparked strength here so far. A little mild push beyond 44.12s here over the last couple of days. That's a short-term key level there. Failure to hold 44.12 opens this thing back to 43.55, which is the bigger level. So overall, that's the zone where bulls are attempting to hold above. Pull back into that area could offer a buy opportunity for completion of the move into the next upside target, which would be 45.23. Failure to hold above 43.55 opens up a further rotation lower. But right now you can see the pattern of strength. You can see the weekly pivot range being created at higher and higher levels. Pullbacks to that range are buying opportunities, and so far we see continued strength as a result. So failure to hold above 43.55 will kind of turn this thing on its side and either create a sideways range or a pullback. Until that occurs, further strength should be seen. On an intraday time frame, one thing that's very important here is the previous session's high, 44.40. That level is being tested right now, and you can see the initial pullback off that zone, initial rejection. Above 44.40 has current primary upside targets on the day at 44.64 with a scaling point at 50.5. Failure to see acceptance above 44.40 could rotate this thing all the way back to 5-day value at 43.96. So you can see there's a clear range here from 44.20 to 44.40. Look for further development in this range. Outside of this range could open up a nice push into previous value or into the next upside primary targets on the day. All right, that's it for now. Let's see how we play out heading into the rest of the week. Good luck and trade well.